So this is again L2 investor. This is sixth session, and those are watching sixth session directly. This is advisable to them. Please watch other 5 sessions on the YouTube channel link that will be available. In between, I will give you on the YouTube link on the chat box. So right now, I'm going to start with the MACD. Like what we have seen yesterday was related to moving averages. Now this is advanced version of moving averages that we are going to deal with. First of all, I will like to pay my tribute to नेताजी सुभाष चंद्र बोस जिनकी 125वीं जन्म जयंती है. And the very interesting sentence written there: life loses half of interest if there is no struggle, if there is no risk to be taken. So there is a message to you guys: will not take any risk, then there will be no progress. This picture is borrowed from HT, but still that I like that particular quote. That's why I have shared this. And very important personality, Netaji Subhash Chandra Bose. So take risk and make progress. And in fact, take calculated risk. All right. So what is MACD? Coming to the topic. The MACD is moving average convergence divergence, right? This divergence and convergence is what that we will discuss definitely. And that is again a momentum indicator, means it will give you a better result in a trending market. If market is moving in one direction, so you can book the maximum profit and you will get the minimum loss, right? So that is two different moving averages that we use here. In fact, three. And there are some other things that will give you the clear signal where to buy the stock and where to sell the stock. Otherwise, where to sell the stock and where to buy the stock. This is about selling a stock also and buying a stock also. You know, in the market, as I have told you, that I will give you the idea that how to gain profit in a falling market. So there also this indicator will work and work beautifully. It's important to provide the name of the creator of this indicator, Gerard Appel, in 1917, in fact, exactly 1979. But our interest in finding out how this will work, right? Now, to this, there is the very important concept of the MACD is MACD is quite a simple indicator, right? It is again a lagging indicator, depends upon the price of a stock only. But how does it work? It calculates the difference between 26-day and 12-day exponential moving average. Last time what we have seen, moving average of the 20 days or the 50 days or the 200 days. Here it is automatically designed 26-day moving average line and 12-day moving average line, right? And these two lines, where the 12-day moving average line, definitely it will move faster. It will change its track faster, and 26-day moving average line will be definitely little slower than the 12-day moving. So here we calculate the value of both moving average. In fact, we calculate means our software will calculate. You need not to calculate anything. And there is a, in MACD chart, there is a 9-day moving line, and that will give you the base of everything. And on this base, that these lines will move up and down, and this will create bullish signal or bearish signal. As you know, bullish signal when the price starts moving up, and bearish signal when the price start moving down. So this how we can conclude and how we can move further, that will go slide by slide, and we'll see it. So what is divergence? This one term that we have to use. A divergence is something when the price is moving in a upward manner, but you are indicate the price is in a range. You can see that clearly that price is moving in a upward manner or price is moving in a range. Here I am explaining the term divergence. How do the divergence terms can be explained? So price is still moving upward, but you can see downward at the MACD that the indicator is moving downward. So this is a clear cut downward signal. Though the price is moving upward and the MACD is moving downward, it means definitely in future the stock is going to move downward. You have to be careful while buying. But definitely, while this will confirm that the stock is going downward, you can sell this particular stock. So this is what we call divergence. Divergence may be in opposite direction also. When the price is moving downward and MACD is moving, or any other indicator is moving upward. So whenever the two things are in a different way, different directions, that price is moving on upward direction and indicator is downward, or say price is moving down upward and the indicator in downward and the price is moving downward and indicator is moving upward. These two things are known as divergence, and that is very useful while taking trade according to any of the indicator, not only MACD. That is very, very useful in case of any indicator. So coming to, so I just wanted to give you the idea about divergence, right? So in MACD, moving average convergence divergence, that is one thing, and that is actually a trend following indicator. Whenever the trend is there, once you will take a trade, that will give you the maximum profit. And very interestingly, MACD gives you minimum loss. MACD gives you minimum loss, maximum profit. But how to use it? How to use it? We will try to learn each and every point. There are 4 different ways to take trade through MACD. Yeah, clearly, please note it down. There are 4 different ways to what to do to take trade according to MACD. In a trending market, that will give you the precise and clear idea about taking a trade, right? While taking a trade, when I say taking a trade, it may be a sell trade, it may be a buy trade. Be careful, right? So that I have told you that is exponential moving average, and I have told you yesterday also there's simple moving average and there's exponential moving average. In exponential moving average, what we do in exponential moving average, we generally what we do generally in exponential moving average, we generally take the latest what we call latest this particular candle with the maximum importance, and the candles before that is having the less importance than that, and the candle as that is far candle will become least important. So whenever a new candle forms, we take maximum weightage to that particular candle in the exponential moving average. That is to understand only, need not to calculate. Everything will be calculated by the software. I will go through the real-time chart and I will show you how to apply it and how to trade with it, right? Then the MACD line, the fast line, where we take 12-day moving average. Signal line, slow line, that is 26-day moving average. Zero line or the baseline, center line, that is 9-day moving average, and the MACD histogram. So you can see this, that MACD line, that is green in color, signal line is red in color. It may depend, sometimes that is green and black also. It depends upon what kind of software you are using. And the zero line is the baseline, that is the zero line. Above and below that, there is histogram got created. So histogram is the MACD histogram that is above and below that particular line. And these two moving lines are, green line is MACD line and the red line is signal line. You can say it fast line also and slow line also. Right. Another important thing about MACD, this works beautifully not only with the stock but also with what we call commodity trading, forex trading, crypto trading, anywhere you can use it. In fact, most of the indicators are useful in all the cases, right? So coming to the next slide, MACD calculation, as I have told you, there is a MACD line, that 12-day EMA and 26-day EMA, that is signal line. And a 9-day EMA is the MACD line, that is MACD histogram. MACD line and the signal line, that will give you the signal how to proceed further. So again, the average, generally what happens is in the software, it is written 12 days, 26 day and 9 day. But some of the people, they change it according to their setting. But my idea is default setting is the best setting. That is according to me. You may change it, but this is a proven data that you have to keep it 12, 26 and 9 days only. So that will work in a better way. Now, MACD line and signal line will give you the signals. How, when the two type of crossover is there, what kind of crossover there? Two type of crossover there, positive crossover and negative crossover. So how does it work? Whenever the crossover, that the green line will cut the red line, that is the red line is a signal line and MACD line, that a slow line will cut it on a upside. So the green line is moving up. Then this particular point will give you a positive crossover. Means here it is signaling you the stock will move up. While in the second line, it will start moving down when this particular line, which line, that particular the green line will cut the red line and come downward. So that is what we call negative crossover. So here you can see this particular point here at the first red dot. Here the red line is moving up and green line is moving down. This is a downward signal. Here this is an upward signal. Here that is a downward signal. Here that is an upward signal, downward signal, upward signal. So this way you can find out which is a downward signal and which is a downward crossover and which is a upward crossover. Moving further, positive crossover and negative crossover. What is positive crossover? Right, positive crossover. See, this is one of the important thing that you have to find out is how you'll find out this particular crossover you should trade and this crossover you should not take. You should not trade. Again, every crossover is not, you should not trade with every crossover. On which crossover you should trade, this is very important point. Just see this particular picture. What is going on? This particular line or this particular positive crossover on this side, this green line is moving up, right? And green line in the first left hand side top picture, the green line is moving up. When the green line is moving up, what is going on? It gives you the signal that stock will move up. Another time, what is going on? But in the first picture, the green line is moving up above the baseline, above the zero line. In the second picture, green line is moving up below what we call below this particular red line. All right. So what is these two? In these two signals, which one is more bullish? Try to understand this very carefully. Whenever the green line will cut below the zero line and both the lines will cross above the zero line. You can see the small circle there. You can see the small circle there. When both the lines will move above this zero line, that will give you a strong bullish signal. So whenever that line either crosses above the zero line or after crossing below the zero line, both the line moving upward this histogram or the zero line, then this is a strong bullish signal. On the bearish case also, whenever the line is moving, the red line is moving up and green line is moving down, that is a bearish signal. But when this particular histogram or the zero line above the zero line, whenever this red line will cross and it will cross below the zero line, once both the lines will cross the below zero line, this is a perfect sell signal, and you can check yourself in most of the charts. Whenever this kind of crossover will open, when the crossover is happening above the zero line, that is a negative crossover, and both the lines are crossing below the zero line, this will give you the maximum profit with the sell. Maximum profit with the sell. So this is how it works. This is how it works. Now moving further, this is MACD double top and MACD double bottom. Very interesting. And this is another very important indicator in the MACD chart pattern where you will be able to get again maximum profit. When this line is making, these two lines are making a double kind of pattern and it is not able to move above that, what will happen? It will start moving down, and once this double top kind of pattern you will be able to find out, immediately you should sell the stock according to your time chart and you'll get the profit. In the double bottom case, whenever both the lines will cut each other and this will move upward, this green line is giving you the buy signal. Once this double bottom pattern is there and this green line will move up, you should immediately buy the stock, and believe me, you'll get the maximum profit, right? But this is not the only case. there is in the MACD chart, there are some few more things are there. That is positive divergence, that will give the strength, and the negative divergence, they will give the trend of weakness. So strength and trend weakness will give you a better idea once you will start following this histogram, right? And this negative divergence, right? So I have told you the divergence. I'm going to give you the divergence again. What is that? The divergence is when the price of an asset moving in opposite direction of a technical indicator. Price is moving upward. Say MACD is moving downward. Then that particular asset will definitely in future will move downward. So that is a clear warning sign that price is weakening and the stock or your asset or your currency will go down. That is very, very important that how does it work. So divergence is one area that you have to look for. In fact, once you'll start applying this thing in the chart, you'll find two different kind of charts, MACD and MACD divergence. My suggestion is you should use MACD divergence, so it will help you to find out correct way to trade. In fact, you will not be get into a whipsaw kind of market where you are going to take a wrong trade. So this is very important. Whipsaw is one thing that whenever you will take a wrong trade, suddenly the price moves in opposite direction other than your trade. That is known as whipsaw. So here, try to understand this histogram positive divergence. Say what is going on? Price is, just see this particular picture. The price is moving downward. The price is moving downward. This histogram, this histogram is moving. This particular histogram is moving upward. Though MACD is moving downward, but histogram is moving upward. This is positive divergence. This is positive divergence, and definitely once this chart will give you a green signal, once this chart will give you signal, this red line will crossed by this green line, you should take a trade. Divergence is the best idea to trade in the MACD chart. Now histogram negative divergence, the price is moving upward, but histogram is moving downward. Histogram is moving downward, and this red line will cross by this green line. And once this will cross, you should sell the stock immediately and make profit. So this is how divergence will help you to find out maximum profit with the help of MACD. Right? Just see. This is what we have seen, the histogram divergences. Now this is MACD divergence. MACD means these two lines of divergence, red and green line. See what is going on in the first picture. The price is moving downward. And the area of concern is that circle, the small circle that is there. And what you will see that continuously the price is moving downward. And while the price is moving downward, that your MACD chart or the MACD lines are also moving downward. But suddenly it is taking upward move. That it has created the first low, but the second low is above that. This is a divergence. And once after this, green line will cross this red line, you should take a buy trade. You should take a buy trade. And once you will take a buy trade, this trade will again give you a good profit. On the same manner, in a negative divergence case, in the bearish divergence case, what is going on? This particular line will move, the chart is moving upward. That whatsoever the asset class you are trading, either that is a stock or a commodity or something, that is moving upward. But suddenly you'll find that MACD is not moving upward as the chart is moving. And once this green line will cross, this red line start moving downward, you should take a sell trade. So this divergence, you have to find out this kind of divergence in your charts. And once you'll get this kind of divergence, you must trade. You should trade. And in fact, the different analysts, they give you the call, television or wherever you get. They most of them they use moving average and they use MACD to find out this kind of divergence. Sometimes they use the breakout also, but in the breakout, what happens? Sometimes the breakout are fake breakout, And with the help of the divergence, you'll be able to find out that breakout is a correct breakout or that is a fake breakout. And with the help of that, you'll be able to trade correctly. You might have seen that one TV analyst has given you a particular kind of chart or the particular kind of stock to buy a particular stock. But what happens suddenly? Once you buy the stock, it starts falling down. And in the panic or in a situation when he is not able to update that particular about that particular stock, you generally book loss and you come out of that. What happens? These kind of divergence get created and you're not able to see that. So in any kind of trade, you have to be very specific about your stop loss. And once stop loss is there, book it, because stop loss is again a profit. How it can be profit? Because you're not making more losses. That is very, very important. Right. What we have seen in the last 3-4 days in the market is continuously coming down. And the people are in panic. Right. But what you should do? You should not sell your stocks in panic. You should check your charts, and whatever the chart says, create a proper stop loss and then forget it. Why to worry about that a stock will come down? Then it will automatically get sold and you will not get any further losses. And say stocks will start bouncing back from an important point, you will not be you will be able to get maximum profit. You should not sell it according to, because others are selling, if market is going down, you should sell your stock. No, you should not. Right? This is very important. Now, crossover. How does a positive crossover and how does a negative crossover, and how we can check the whipsaw? What is a whipsaw? Whipsaw is something when you have taken a trade, and after you have taken a trade, and what happens? Suddenly you find that there is a crossover, but the trade is not going in your way. Right? Suddenly it changes the direction, and you are getting a loss. Right? Here, what is going on? This is a positive crossover, and that is a very, very good crossover. What is going on? That crossover between the red and green line in the left hand side first chart, in the first crossover, first image, what is going on? The red line is taken over by the green line. You can buy the stock here, and you should sell it wherever the green line is going down. You should come out of that. But whenever the crossover is below the zero line, when the crossover is below the zero line, you should not buy it here whenever the crossover is there. You should buy it only when both the lines are crossing this particular zero line. Once will buy it there, that will be more beneficial. You will not be able to get, you should not get whipsaw. Otherwise, you'll buy it here. There is a chances of whipsaw may attack you, and you will be able to generate. You will not be able to get profit. In fact, you will get a loss. Right. Another thing, in the negative crossover, whenever the crossover is above the line, you should not sell it here. You should sell only once these two lines will cross below this particular zero line. Right? Only then you have to sell, then only you'll be able to get maximum profit out of the sell. Now, how to use this particular MACD? In the, say you are trading intraday, you are playing for a day, then you have to use it on a 5-minute chart, on a 10-minute chart. Right? For the 2-4 days, you should use it for the 15-minute or 30-minute or 1-hour chart. Right? And for the long-term trading, you should use it on a daily chart time frame. Right? I suggest you, whatever your trading strategy, generally most of the people, those are working, they trade not according to the intraday or for the 2-4 days, they generally trade for the long term. So you should use this particular chart on a daily chart time frame. Right? I will show you how to use it. Right? Further, in a positive crossover, coming to back previous slide, how to create a stop loss on this kind of trade. Right? See it carefully. What is going on? You'll get it a positive crossover below the zero line. Right? What you have seen, just see it carefully. There is a positive crossover, means the green line is going up, then above the red line. So that where what you can do, you should not buy it here. When you have to buy, once both the lines will cross this particular zero line. it has crossed on this particular, I have created the arrow, so this has crossed over this particular green candle. So you will be able to buy above this candle. So I bought it there. Where your stop loss should be? The stop loss should be below this particular candle. So you have created a stop loss there and you have bought it there. Now the stock has started moving. And what will happen? When you have to book profit, you should not book profit early on a single day red candle. You should not book it. Whenever these two lines will again cross, this green line will cut this red line and go downward, then you have to book profit. Meanwhile, what you can do, you can trail your stop loss. Say you have bought a particular stock on 100 rupees, it has moved to 110 rupees. Then your stop loss should be at your buying price. It has moved to 120 rupees, your stop loss say 110 rupees. It has moved to 130 rupees, stop loss say 120 rupees. So slowly move your trailing stop loss upward. So that will give you the maximum profit, right? And once this line will cross each other in a opposite direction, you should immediately sell and come out from the trade. So you'll get the maximum profit or the whole run that you should be able to get, right? Coming to the next, negative crossover. What is going on? A negative crossover taken place below this particular line, right? The green line is taken over by the red line and you should sell it immediately. While selling, you'll be able to sell below this red candle. After selling, your stop loss be just the candle before this particular candle. This is the stop loss. And you should write the trade up to which point? Up to the point where again these two lines are crossing here. This is your profit booking point. There you have to cut your trade. It means you have sold it. You have to buy it here at this particular point when these two lines are again crossing each other. So you will get the maximum profit out of the selling also. Again, in case of positive divergence, what is going on? Just see. The stock is moving downward, right? But suddenly what you'll find, there is the MACD chart will show you that the chart started moving upward. And once it started moving upward, whenever these two will cross again, here, I have created the arrow. Whenever it will cross again, you have to buy it there. And in case of divergence, you should not wait for these two lines to cross the histogram. No, the zero line. That you should not wait. In case of positive divergence, you should take immediate trade. Divergence cases are very rare in the market. Try to listen it carefully. Divergence cases are very rare in the market. And whenever these type of cases are there, this is 99% sure you are going to make a huge profit. You are going to make a huge profit. So whenever the two lines will, that MACD chart will show you a divergence. It means the stock is going down, but MACD is moving upward and it makes a positive crossover. Take a trade and ride it. All right, till to the next point. This is a very good opportunity to buy a stock. On the similar manner, when the stock is moving upward, but the chart will show you the divergence. It means chart is showing you the negative divergence. It means chart is going down. And whenever this line crosses, even that is below the zero line, above the zero line, you should not wait till this zero line. You should sell it immediately. And believe me, you will get profit 99% times. This is how we call negative divergence. These kind of trades are rare in the market, right? Again, this was the MACD divergence. Now coming to the histogram divergence. That is again very rare. Histogram divergence means that volume kind of bar that you are able to get, that is the gray color bar. And what is going on? The stock is moving downward, but histogram, this red line here, this very important red line, what you will find that these candles or these volume bars kind of things are going to become smaller. Smaller means this is showing that stock will move upward in the future. So this is a kind of divergence. Though the stock trend is negative, the stock is going down, but this particular histogram shows you that positive divergence. It means the stock will move up. And whenever there is a crossover of the green line, take a trade immediately. Do not wait for this zero line crossover and get a maximum profit out of that. So this is very, very important. Histogram positive divergence, on the similar manner, the histogram negative divergence. What you'll find, the stock is moving upward, but this histogram volume kind of thing is giving you the smaller bars. So this is a negative divergence. Whenever this cross signal is there, the red line is moving up and the green line is moving down. Sell it immediately. Do not wait till zero line. And what will happen? You get a maximum profit out of the sell. So this is how histogram negative and positive divergence works. So instead of crossover, divergence will give you high accuracy. I'm repeating. Instead of crossovers, divergence will give you high accuracy, high profit. Though divergence trades are very rare in the market, but that gives you very, very good profit. So this is the idea. Try to book profit or try to take a trade in case of divergence. Right? Divergence will give you a much better trade. Right? Now another kind of, I have told you MACD double bottom. This double bottom is there, and after this double bottom, that is a positive crossover, and you should take the trade again immediately. Should not wait for the zero line cross, and you'll get a profit. Double bottom means one bottom and the second bottom, and then there is a positive crossover. Take a trade and make the profit. Try to write the run. Right. On the MACD double top again, two tops are there, and suddenly the price starts this negative crossover, and the negative crossover you should sell and get the maximum profit. So I have told you, one is the crossover kind of trade, another is the crossover kind of trade. When the green line is crossing up, then you should buy. When the red line is crossing up, you should sell. Then there is divergence trade, that is MACD divergence. Then there is a histogram divergence, and after that MACD double top and MACD double bottom. Now let's move to the chart. And we are going to take, say, most popular chart, Reliance chart, right? And the chart is there. Oh, wait a minute. Reliance chart is there. Reliance the chart. Yeah, this is the chart. And what is going on a chart? Just see. In this particular chart, when we are going to apply MACD, how to apply MACD? This chart is not having any indicator right now, right? And the time period I have chosen is the daily chart. This is a daily chart of Reliance. The currently price is 2477.85, right? Go to the studies, and once you'll write MACD. There are two kinds of indicators emerge. One is the MACD, another is the MACD divergence. So I will put MACD divergence. You can put MACD also, but MACD divergence is a better idea. It will give you the, you need not to check MACD divergence by your own, but it will give you the direct divergence lines, right? Say, how does it work? All right, on a daily chart, just see, there this is a positive crossover. Here, that blue line or the red line or green line, the red line is down and green line is started moving up. And whenever these two lines are crossing, you can buy it. And what is going on? You can sell it here. So this, from this level to this level, you are able to get the profit. All right, this is crossover. Again, this is a negative crossover. You can sell it here and you'll be able to get the profit this much from here to here. On the similar manner, just see, this is a negative divergence. This is a negative. This just see this divergence trade. How does it work? Right. This is a negative divergence in the MACD chart. Right. So this negative divergence, the red line is there. In this red line, you have to sell it here at the end. Whenever this line is crossing to red line, the blue line is crossing below the red line, and you have to sell it here at the rate of 2723. Right. Somewhere you are able to sell it, or you'll be able to sell it somewhere at 2732. Once you sell it here, the stock price starts going down, and you have to keep this trade till the level again it crosses. So it crosses somewhere here. So you'll be able to get the profit because at the low price is 2949. So you have sold it somewhere here at this price 26 2650 say, and you'll be able to get profit here at this level that will be 2322 2328. So almost more than 300 rupees profit that you are able to get on a negative divergence, on the basis of negative divergence. On the similar manner, this is a positive divergence. Just see, this green line is the positive divergence, and after divergence, it is crossing it here. This red line is below, and the blue line is at the top. So you'll be able to buy it at this candle. At this candle, the price is 1961. The price is 1961, and it again crosses further on a, that is 2120. So your profit will be almost 160 rupees in a single stock. So this is how you can trade the divergence. But what you'll find in the last 2 years, almost 1.5 year, the divergence are available once, and that is two times only the bigger divergence are available on the chart. But whenever you are able to get this kind of divergence, these are the clear buy and sell signal, and you should use it. You should use it while selling and buying, right? Otherwise, take another chart. Say info, which chart we should take? Take another common chart. Say Steel Authority of India Limited. Now find out this. How big divergence is there in the chart of sale? Just this, see this, here to here, there's a very big divergence is there. At this point, you have to sell. Here you can sell, and you will be able to sell at the price of 140. And believe me, in the future, that one lot of the sale is somewhere around 4,250 shares approximately. 4,250 shares you have sold. Say one lot, because in the you can sell in the market with the futures or in the say option market only. So you have sold a future of the lot of 4250 shares, right? And one lot. And again, the buy signal gets generated somewhere here at this price, first buy signal 120. So total profit is almost 20 rupees or 22 rupees. So 22 multiplied by 4250 will be the total profit in one lot only. So whenever you are going to get this kind of divergence, you must trade. You must trade, and you should make profit out of it, right? So this is the idea how to move in a particular trade, right? So divergence, I'm going to explain it again. Whenever the price looks stable or the price is moving upward, but MACD chart or the histogram that moves in a opposite direction. Just see, MACD here makes a top, the price in the same range, but the MACD is making a lower peak. So the price at the same range, but MACD is giving you the lower peak. So what does it mean? It means that here you must sell a particular stock, and while selling a stock, you should find out that how to sell a stock through a call option or buying a put option or selling a future. So you can sell a future, you can buy a future, you can buy a call, you can sell a call, you can buy a put, you can sell a put. So this is how MACD chart works. Now almost 15 minutes available still. I'm inviting your questions. Please ask questions, any kind of doubt, so that I can repeat that particular concept, and we will be able to become clear in this particular MACD kind of chart. Otherwise, those they want to repeat, there will be Hindi session from 12:15, and you will be able to get the whole lecture again in Hindi. So try to understand this. This is a very powerful technique of buying and selling a stock. I have shown you with the backtest also that how does it work, right? So what you should do, you should open and find out the 4 different kind of trades, those already part in the chart, and try to backtest that and find out how much profit you can get. Like in the chart of the sale, what we have found, say 20 rupees is the profit and one lot is 4250. So able to get almost 85,000 rupees of profit in a single trade, right? But you will trade it carefully. This kind of trades are available in the market. These kind of trades are available in the market. But you have to be, you should learn all these things. You should clear your doubts, then only you'll be able to get these trades. So if you are having any doubt, please ask. If you want to repeat, you can come to the Hindi session again. You can repeat it there. Please ask your questions. Anyone? प्लीज पूछिए. आप चैट बॉक्स पे भी लिख के पूछ सकते हैं, मुझे पर्सनल विंडो पे लिखिए. मैं बगैर नाम लिए रिप्लाई करूंगा. जरूरी नहीं है कि मैं नाम लूं आपका और रिप्लाई करूं. मैं बगैर नाम लिए भी रिप्लाई कर सकता हूं. आप पर्सनल विंडो पे क्वेश्चंस मुझे ऐसे ही पूछ सकते हैं कि वहां पर अपना क्वेश्चन लिखिए. मैं नाम नहीं लूंगा आपका, कोई दिक्कत नहीं. मैंने YouTube का लिंक चैट बॉक्स में डाल दिया है. आप इस चैनल पे कोई इसे सब्सक्राइब कर लें. ज़्यादातर वीडियोस, सारे नहीं लेकिन ज़्यादातर वीडियोस आपको चैनल पर दोबारा रिकॉर्डेड मिल जाएंगे, क्योंकि हम जूम मीटिंग रिकॉर्ड करते हैं और ज़्यादातर वीडियोस हम अपडेट कर देते हैं YouTube पर. सो प्लीज़ फाइंड आउट दिस YouTube लिंक ऑन द चैट बॉक्स and follow that particular YouTube channel. You'll be able to get the previous lectures also. Quickly, I am giving you that how it is working, right? So it is working in a 4 different ways. One is what we have seen, MACD crossover. Other one we have seen, MACD crossover means MACD negative crossover, MACD positive crossover. Then we have seen MACD divergence, that is MACD positive divergence and MACD negative divergence. Then we have seen MACD, that histogram divergence, histogram positive divergence and histogram negative divergence. Then we have seen MACD double top and then we have seen MACD double bottom. So this one indicator that you can use for all the stocks, for all the commodities is the MACD, right? And this is very widely used indicator, right? And once you start, what you have to do is you have to practice it for the few days. Then only you should take a real trade. So trade on a paper trade. Paper trade first means take a particular look on the MACD chart. And once you'll take a look on the MACD chart, try to find out your trade and write down on the paper that you have taken this particular trade. Do not take it really. Write down a paper. And whenever there is whenever there was signal to sell a particular stock, just note that price also and find out if you would have taken that particular trade, how much profit you are going to get, right? So if there is no question, I'm going to stop this meeting and we are going to meet again at 12:15 in Hindi, right? And I know this is a, yeah, ma'am, I got it. So the thing is, this particular kind of indicator is little difficult to understand initially. It will take twice or thrice to revise this indicator while understanding this, and you'll be able to take trades, and you'll be able to take profitable trades, right? So I'm going to stop this meeting as I have to again come at 12:15. I'll again available to you at 12:15 on the different link of Hindi. Right. Thank you.